LiteFinance, the world of financial freedom.
Hello guys, it is a Tuesday, yet we still have 4 days including this one, so let's summarize what we already got and what we can expect in the rest of the week. So in terms of a calendar, we got yesterday PMIs from Europe key economies and the US. As you can see, services are doing very well, while the manufacturing in the US is just slightly above the red line, we could say, because level of 50 is the level which means either the sector is expanding or contracting. We could say it is typical for developed economies that services are doing much better than manufacturing, and it is visible that the US has dealt with supply chains better than the EU. If you check the manufacturing PMIs from Germany, for example, you will see a bigger difference. And so PMI indexes and stock markets for now point out that the recession will not come as soon as many are expecting and talking about. So today nothing major is published, and on Wednesday we will get a Bank of Canada interest rate decision where no changes are expected, and later crude oil inventories will be published, which will be interesting since we moved up a bit and now we are testing the support at around $70 in WTI. So on Thursday will be interesting. We will get the GDP figures from Japan and preliminary readings from the Eurozone. On Friday we have employment changes from Canada, but I think the information which we will get from the BOC on Wednesday will have a much bigger influence, so I would not pay that much attention to it. Now let's move on to fundamentals for the Euro USD. The debt ceiling issue threatened the US economy with a default. However, solving the problem does not mean that there will be no consequences. More than $1 trillion worth of treasuries is expected to be issued soon, which will flush out liquidity from the banking sector, increase short-term funding rates, and tighten an economy that is already moving towards recession. Concerns about this allowed Euro USD to recover a little after the release of the US jobs report. The Treasury's cash balance has shrunk to $23 billion, and according to plans, the balance should be $550 billion by the end of June. A huge issue of treasuries is inevitable while the growing budget deficit increases its scale. At the same time, disappointing PMI data suggested that the signal from the labor market for May was associated with rising unemployment and not with the expansion of employment. This reduced the probability of a federal funds rate hike in July from 68% to 65%, forcing Euro USD bears to set back. Issuance of treasuries risk causing a new outflow of deposits from banks and discussions of banking crisis. The pace of lending and the economy will slow down. The latter is already failing. The disappointing US non-manufacturing sector data by ISM was an unpleasant surprise for the dollar. The indicator fell from 51.9 to 50.3 in May, while the forecast was 52.2. And until now, the service sector has been the main driver of US GDP. If the PMI index falls below the critical level of 50, as I said, a recession will be inevitable. At the same time, disappointing PMI data suggested that the signal from the labor market for May was associated with rising unemployment and not with the expansion of employment. This reduced the probability of a federal funds rate hike in July from 68 to 65%, forcing Euro USD bears to set back. Fed officials will wait and then act again in July. They will pause at the first meeting and then consider raising rates at the second. At the same time, the derivatives market increased the estimated value of the borrowing cost from 4 to 5% by the end of the year. So dovish reversal is still possible. In such circumstances, use medium-term consolidation to make profits. So continue entering purchases when Euro USD is falling towards 1067 and add up to long trades when the pair consolidates above 1072. So that would be all from my side, guys. Thank you for watching, and I'll see you in the next one.